but like most of the people who are buying assets at some point want to sell the assets at a profit.
People that use fiat currency as a store of value, we call them poor. We call them poor. People that use fiat currency, we call them poor. We call them poor. We call them poor. We call them poor. There's a name for them. We call them poor. We call them poor. Okay?
Welcome back, episode 2. It's your boy Chris. Right out.
It's Adam.
Welcome back, episode 2 of the Bitcoin Fellowship. We're gonna jump right into it. We got a lot to talk about today.
You need a strategy, guys. And first, let's go ahead and check the Bitcoin price.
Let's check it. I got it on my phone.
117,600. So our last podcast was roughly 1 week ago. Is that 107,300, I think.
Yep.
And so what do we take from that? Is that, keep watching and Bitcoin will go up every 10,000 every week.
But you got to hurry because every week that you don't buy Bitcoin, it's going to run away from you. It is block height 905,316 at the time of recording. We're not up to the level of doing these shows live yet, but for anyone that cares, that's when we recorded this episode. All right. Not financial advice. Let's get into it. The Bitcoin Fellowship. Welcome back to episode 2. Thank you for joining us. If you watched this last time, you kind of know what we're about, but we're here to talk about Bitcoin medicine and the cost of staying asleep. Most importantly, this is educational and for entertainment purposes only. This is not financial advice. The opinions expressed are solely our own and do not represent those of our employer or any affiliated organizations. As always, you should consult a qualified professional for personal recommendations. Am I taking this one or are you?
Yeah. I thought
Me?
you were this one. Yeah.
No, we're just totally fumbling it. It's like 11, 12 at night. Adam's coming off a 36-hour shift. I had a pseudo family emergency.
Should we just restart?
No, we're not restarting. We're doing it live.
This is why we don't do it live, guys.
This is why we don't do it live. Everyone needs a strategy.
There you go.
I kind of covered it in the intro, but you have to have a strategy to make your financial future what you want it to be. So we're going to talk about this in this episode, knowing your benefits, like knowing what your employer plan is, what they offer, what match they offer, what style of investments do they offer you, and what options do you have within that. The next step is going to be developing a framework to evaluate those investments and what's available to you. Defining your hurdle rate and your risk tolerance and matching that with your long-term liabilities and what you want your life to look like in the future. And finally, once you have all the information, it's acting with conviction and being a long-term investor and fighting the urge to be a trader. Kind of a preview of what we're getting after today. So everyone is somewhat familiar, I think, with different TradFi retirement vehicles. We all kind of speak this pseudo TradFi language. There's pre-tax and then there's Roth products in terms of tax treatment. And that all depends on your individual situation, what's available to you. There's income limits to all that. We're not really going to get into the weeds of all this stuff. But generally, just as a broad overview, you have different tranches and different groups of investments you can do. You have ETFs, which are exchange-traded funds, which are kind of baskets of different stocks. You have individual stocks. You have commodities. And like mutual funds similar to ETFs, but just a little bit different way that they're issued. They all have their own pros and cons, different risk profiles, different diversification outlooks, depending on how you think you're best preserving your economic energy. So what we're going to transition to is we all kind of know that language. How do we speak that language once we're down in the Bitcoin rabbit hole?
Yeah. And I think a lot of this too is this whole episode is kind of about like, you need a strategy when it comes to knowing what your portfolio is and what's in it, and moving forward, how you're going to invest in that. Because the whole idea is that we want to help you become more financially free. We don't want you to be stuck working to live and having to go paycheck to paycheck, and your main source of income being your paycheck. We want your main source of income to be your portfolio. And that's that whole idea, is that as your nest egg and your portfolio starts to grow, that's what's going to be the main source of your wealth. And hopefully you can start to scale back with and have your day job become more as a side gig rather than your main paycheck.
100%. So we talked about TradFi vehicles. What does that look like in the Bitcoin ecosystem? A lot of similar things that you'll see. There are Bitcoin Treasury ETFs. So there's public companies that have chosen to take on leverage and invest in Bitcoin as an asset. Bitcoin Treasury ETFs is a whole basket of those companies. So you get a little bit more diversified exposure. There's different companies that offer those ETFs. Grayscale, Bitwise, a couple options. In the bigger, broader crypto ecosystem, you can do ETFs that focus on miners or other crypto assets, which we're never going to highlight or talk about really on this podcast. But you're welcome to explore and kind of, find where you think your risk tolerance lies, and if you can dream it, there's an option out there for you. Obviously, there's a spot Bitcoin ETFs. Those are not diversified in terms of multiple investments, but it's an exchange traded fund as an on-ramp to Bitcoin. Those are recently approved in 2024, and they're the direct comparison to self-custody, which we're going to talk about a little bit. And then finally, you get Bitcoin Treasury companies. What makes up the basket of Bitcoin Treasury ETFs is these individual companies that have chosen to sell equity or otherwise raise debt to buy Bitcoin, betting on the fact that Bitcoin will appreciate faster than or more rapidly than whatever their cost of capital is. And they return the difference, the delta, to you as the investor. The flagship, the oldest, the original, the OG in that space is MicroStrategy, now Strategy, led by Michael Saylor, who we showed some of his videos last week. We're going to talk more about that as an individual company. But the risk curve and the size and scale of Bitcoin Treasury companies is just humongous. We're going to get in trouble if we call Metaplanet a microcap. I don't think they're quite a microcap. They're probably the other hot topic of the last few weeks. But you have one of these kind of treasury companies popping up all over the globe in every jurisdiction. Everyone's trying to get an edge. And honestly, just accumulate as much Bitcoin as possible with whatever means they have. As a public company, they have access to other ways to raise capital that us as an individual does not. We're going to talk more about the mechanics of that in a little bit. But that's kind of what we're looking at when we're talking about getting your retirement and or your personal brokerage into the Bitcoin ecosystem. There's a somewhat similar language, but a little bit different products.
Yeah. How to get exposure.
Yeah. These are the choices we're going to be thinking about and talking about. I wanted to briefly touch on ETFs versus self-custody. Bitcoin purists, Bitcoin maximalists always have a little bit of internal cognitive dissonance about, telling people to buy ETFs. But the reality is, I'm not going to read through this whole slide, but the reality is here's the reality. What I want. That's what I want. If we're talking about retirement accounts and like allocating those to the best asset known demand, they're not going to let you just buy cold storage self-custody Bitcoin. So you're going to be forced to build that foundation on ETFs. So like, if you're employed and have a legitimate benefits package, ETFs are a real option. And there's some trade-offs as far as risk of losing the private keys, etc. But for all intents and purposes of this discussion, we're just going to assume that you have access to ETFs, which hopefully you do. And that's
you have a retirement account.
Right? Yeah, you have a retirement account, and that retirement account chooses to give you access.
Yeah.
And
the average doc, the average medicine person is going to have some form of retirement. And I think, us being the orange pill docs, it's our job to, our goal is to get you exposure to talking about Bitcoin. And we understand the argument of, the Bitcoin purists, and that like there are some people that are Bitcoin only. We have a little bit more of a real take where the vast majority of people, their first exposure to Bitcoin is going to be through Bitcoin ETF, through a company like Strategy. And that's probably going to happen through a retirement account. Yeah. So we want to go through, both of those aspects, but I almost feel like the way the world is moving forward is that a lot of those people are going to get orange pilled through retirement and get exposure there. And then that's how they're going to start to study Bitcoin. And when they do that, they may almost become, reverse purists, where they own the ETF first, and then they understand the value of self-sovereignty from that.
Yep. And they're also changing legislation to allow in-kind transactions in and out of these ETFs. So like if you buy an ETF with your retirement account, there's a chance in the future you could exchange it for actual Bitcoin, like withdraw your Bitcoin from that ETF. That's not on the table yet, but it's been discussed at high federal, like legislative levels. Again, I'm losing words. It's 11:30 at night. I don't have an excuse because I didn't work 36 hours, but
yeah, 36-hour call shift. That's why I stack sats.
Too many micro traumas to the head playing football, I think. All right. Bitcoin stocks and Bitcoin treasury companies, just kind of diving a little bit deeper into those because we're going to talk about, again, the flagship being strategy here in a little bit. What are these companies even doing? Like if you're totally new to this space, this is seemingly so far in the weeds. But Bitcoin treasury companies, also known as leveraged Bitcoin equities, it's such a new developing phenomenon that we don't even know what to. People argue all the time about what to name it. I like Bitcoin treasury companies personally to avoid the word leverage because these companies are not over levered. They're taking on intelligent leverage and accessing cheap capital that I can never access as an individual, and they're buying Bitcoin with it and paying off the cost of capital and returning the value to me as a shareholder.
Yeah, I think a lot of people view the word leverage, especially if you're not in like the economics or trading space. They hear the word leverage and they think a bad thing.
They think risk.
Yeah, they think it's like a risky product, and people don't realize that like a company like Strategy is 8-to-1 over collateralized, meaning safer, whereas the vast majority of S&P companies are much riskier, or in other words, much more over leveraged than a company like Strategy.
Yeah, they're borrowing money they don't have.
Right. And that's a common thing that people who don't know the balance sheet of Strategy will often say is like, oh, it's way over leveraged. They're taking on a ton of risk, when it's actually the opposite.
Yeah. We're not going to get into all those weeds in this episode, but the Bitcoin treasury companies that you want to learn about and invest in are doing it the right way and taking on intelligent leverage. The space is ballooning so much that I think there are going to be some players that don't, which is why it's important to do your homework and know what you're getting into.
Yeah, I think the important thing is to start realizing that Bitcoin is the hurdle rate, right?
Yeah.
So that's going to become, how do you beat that, or how do you sustain that average yield? And so what you're going to see is the vast majority of the transformation of the S&P 500 and other indices are going to move away from, fiat-based assets towards more of a Bitcoin 100 type index. And we're going to see the vast majority of these companies, these zombie companies, that basically, if they don't adopt, they're going to fall away. And we're going to see the transformation of a lot of this S&P to a Bitcoin type index. Yep. And I think the important thing, there's a lot of Bitcoin treasury companies that are coming out, and that's kind of the new flavor of the month. And I think the important thing to realize, I think Max Kaiser is quoted as saying this, is that Strategy is the Bitcoin of Bitcoin treasury companies. They have roughly 600,000 Bitcoin on their balance sheet. The next closest treasury company is Mara with 50,000. So there's a huge gap there. There's a number of things that have just not even begun to be discussed or, uncovered in this space. And this space is evolving every single day. The safest play in that, I think, is Strategy on a risk adjusted basis. And I think there's been a lot of heat on X about, which Bitcoin treasury company to invest in. There's going to be several of the smaller market cap companies that are going to outperform on a multiple basis compared to Strategy. But I think on a risk adjusted basis, especially, down the line when we're entering a bear market, there's only been one company that's already been in a bear market and continued to stack and survive through it.
Yeah. I think our goal in this whole project is not to wake you up to be all of a sudden day trading all these stocks and micro caps and pair trading and all this stuff. People do that and people make a lot of money doing that. But our goal is to get you off zero and get into intelligent investments that are going to allow you to achieve your financial and personal goals in the future.
Let your investments work for you, right?
Yeah.
You don't want to be trading. That's just another job. You want your investments to work for you while you're working, while you're sleeping, while you're walking the dog.
So the last aspect on this slide is just international Bitcoin treasury companies. People are going real far out on the risk curve and calling the brokerage house to get into these shares at an IPO or whatever. That's going to be way further on the risk curve than we're going to talk about, or frankly, ever really recommend, especially in this setting. But the big deal is if you do feel, hopefully you can get into strategy and really buy into what we're going to talk about today. And if you're going to venture out further, I would say the biggest takeaway, as I've been in the space and figuring out what all these things do, where they're at, is position sizing is key. You see all these people YOLOing in and out of things, and I just don't think that's not the. There's the meme. This is the way. That's not the way. All right, what's next? All those Bitcoin Treasury companies come with this huge Rolodex of KPIs. Again, we're translating TradFi numbers and metrics into now a Bitcoin world. So you have investor level, that is Bitcoin yield, like how much Bitcoin per share they're generating. There's Bitcoin dollar gain, how much Bitcoin they're doing in terms of translated to dollars. For example, Q1 just ended. MicroStrategy just announced a $14 billion unrealized gain in one quarter just due to their Bitcoin holdings and the Bitcoin that they gained over Q1. So that's going to be a huge story to follow as they release those earnings. I think last I checked, the earnings per share estimates are like negative 12 cents per share. This translates to they're going to report $35 a share plus.
Yeah, they're just a little bit off.
Yeah. There's a whole discussion on if that should all be counted as EPS, but I mean, based on the new accounting standards, that's what the number is going to read. Does the market value it that way? I don't know, and that's way far in the weeds. But MicroStrategy will report earnings of over 30, probably close to $40 a share, and the rest of the analysts are predicting negative 12 cents a share. It's wild.
Yeah, bewilderment, right?
Bewilderment. Speaking of that, I sense in the people watching this in the future, there's some bewilderment. We're way over their head. Yeah. Why are we talking about this? I mean, let's pause, rewind. Why are we here? Why does this feel overwhelming in general? What do you think, Adam?
So I think the big thing is that like a lot of people don't have any formal training in this, right? Like you go through residency and medical school and you're so focused on like drinking from a fire hose and understanding just like all the medical principles. You're worried about taking care of your patients. You don't want to kill anybody, right? That's like first and foremost, you talk to any doctor or medical professional, that's like the first thing in their head. They're not thinking about like, I wonder what the equity performance of my average 401k is. It's like way by the wayside. So that's why we're here. That's why the Orange Pill Docs and the Bitcoin Fellowship exists. And there's just so many different valuation methods. Our goal is to just kind of try and break down some of this and make it so it's more easily palatable and digestible. And you just guys have a chance to, ask questions and just try and understand how we got into this and where we think the market is going and just have fun doing it.
Yeah, there's a ton of opinions out there and it's very easy to get overwhelmed. Hopefully we're a voice of reason and not pointing you towards crazy things, and you hear what we talk about and be like, yeah, that's reasonable. I think I want to learn more about that. So if we rewind to episode 1, we paused. Why are we here? Why are we talking about this? We talked about inflation as the invisible tax on savings. Professionals and docs especially start behind the curve in terms of time and debt and just delayed gratification. You get that once a doc graduates, you get that first attending job. I know I personally didn't really think about I'm like, oh, I get a match. Great. Let me figure out how to maximize that. It took me a while, I think, before I realized what is it actually going to.
Absolutely. I think
you're so ready to like be done being a
slave.
Yeah. I mean, that's a strong term.
Indentured servant. Sorry.
Yeah. You're just so ready to be done. Like you're done with school finally. Right? Like you're done. You have a real big person job, adult job.
Yeah. You don't have to focus on coming home and studying as your other job after it, right? You can actually focus on like just living life and not feeling like bad about coming home and having other work stuff to do. And,
And then I think how it works for a lot of specialties, you get that first 12 months in, and then all of a sudden you take your boards, which is what happened to us. You get super distracted by that. And then like maybe a year into practice, you're like, okay, I have retirement. Like, let me make sure it's actually working and like the money's going where they said it was going to go. But anyway, so we're talking about investing because we want to steward our time, energy into our future purchasing power to meet our personal and financial goals.
I think and you say back to episode 1. Episode 1 was all about opportunity cost, right? And we kind of went through that and why there's opportunity cost in training, and so why you need to pay attention. This whole episode is about like you need a strategy, and you need a strategy because we want you to build this portfolio so that you can develop financial freedom. And a lot of people are like, okay, well, I kind of have an idea of financial freedom is, but like, how would you boil that down? Like, what does that mean? This is this whole idea that you're moving from your main source of like income being from paycheck from your medicine work to portfolio driven wealth. And, people often quote retirement as being this age, I'm going to retire at age 60 or 65. And that's not actually how it works, right? Retirement isn't an age, it's a number. And that number is based upon the nest egg, right? So if you're going to retire at 40, obviously you need a bigger nest egg to take care of yourself over the next 40, 50 years, however long you plan to live, as opposed to something like 60, 70, where you're not going to live as long. And so when the point at which you're financially free is when your portfolio driven wealth starts to surpass your paycheck driven wealth. And it's this idea that owning assets lets those assets work for you in the background 24/7, 365 days a year, instead of you going to work and slaving away to get that paycheck.
Preach. So the context, again, we highlighted this on episode 1, but this is a tweet I screenshotted and saved this week. Half of the U.S. debt has accumulated in the last 10 years. Like, I remember my dad talking about the deficit as a kid, and I wish I remembered the actual numbers. I should look up what they were, but they pale in comparison to the deficit numbers that we talk about now. It's huge. And you had a stat about the purchasing power of the dollar, right?
Yeah.
Over the same time.
So Chris threw this slide kind of last minute. We were going through it just to kind of think about it. And I was like, this made me kind of question. I was like, okay, well, Bitcoin's been 2009. I wonder what the value of the dollar has been from 2009 to now. And so I chat GPT'd real quick, and doing what Saylor taught me to master AI. I was like, what has the value of the dollar been from 2009 to today? And the US dollar has lost 46% of its purchasing power since that time in the last 15 years, which is just crazy to think about. Makes you wonder what's going to happen in the next 15 years.
Yeah. Well, we just increased the deficit again with the big, beautiful bill. So we're not quite turning the ship around. If you've been following macro stuff, we've decided we're going to grow our way out of it, which is interesting. I think it is one of our only options, but it's going to inflate asset prices even more.
Yeah.
So you want to have assets and have a portfolio and a plan, because everything's, I think, about to just get rocked. And to the upside, which is good, but
yeah. But the big thing is getting to that. What does that 50% devaluation of the dollar in the last 15 years mean? It means you have to run on the hamster wheel twice as fast to make the same amount now as you did in 2009.
Yep.
I'm a pretty fast runner, but I don't want to go run a 4-minute mile.
I'm not a fast runner, in case you were curious.
Chris is much stronger than me, but I'm more endurance based.
I'm not even anymore.
That's what we're getting at, right? Is that you want the assets to start working for you. You can't just constantly run faster on the hamster wheel. If it gets devalued, you're going to run a 2-minute mile, it's just completely unsustainable. So you want those assets to be working for you. And that's what with all this money printing is going to be doing.
Yep.
So we wanted to get in some principles of investing, right? So if you think about, what you're doing when you go to work, is that you're going to go in and put in your energy, your labor, and your time. And what that does is that generates US dollars that you receive. And we're all kind of scientific method here. We think about in terms of science, and a lot of this that Saylor will quote as well. But there's this first law of thermodynamics, right? It's this idea that energy cannot be created or destroyed. It gets transformed from one form to another. And in that process, there's a form of inefficiency or friction that occurs, which is lost as heat. And that's kind of a loss of energy that occurs in the transformation of one form of energy to another. You can think potential energy to kinetic energy. I like to relate this kind of scientific basis of this back into economics. And so you go work, right? You go mine fiat at your job, take a call shift, whatever it is in medicine. They pay you in US dollars. There's already a form of energy loss there, which is taxation, right? And then not to include, there's also the savings tax of them devaluing the dollar. So you're already starting to lose heat or energy there. How do you preserve that energy that you've just worked? Well, you need to transform it into a form of capital that saves value, right? And what we're trying to get to is that talk about how one of the assets that most preserves the energy the best is Bitcoin. It's this digital transformation of energy and digital transformation of capital. And that Bitcoin is the pristine asset that doesn't have decay, right? It's completely finite, indivisible. You can hold that and it's going to store its value over time. And so it's not physical. All these physical assets will depreciate in value, right? You go think about you buy a car off the lot and you instantly start driving it off. It's already lost multiple thousands of dollars once you start adding on that mileage. You could say the same thing about the dollar, right? We just talked about how it's lost half of its purchasing power in 15 years. You could say that about real estate, right? There's costs associated with maintenance of your house. There's housing taxes. You could say that about silver and gold. Gold's depreciating with its inflation rate of around 2 to 3% per year. historically the best has been land, but even with land, you know, there's a tax to owning that land as well. And so the useful life of physical assets is often on the realm of you know, maximum 100 years until you lose that energy, you know, that purchasing power gets completely depleted over all that time.
Yeah, and the energy of these physical assets is all being lost by all these things on this slide: city taxes, county tax, all the taxes, all the competition, all the weathering, decay, everything. Like if you name a physical asset, you think about, imagine in 100 years, it's worse off than it is today, if it's even around at all, right?
Yeah. And so we've never had a good way of storing that capital, right?
Right.
You think about like, it was a good idea to buy like Manhattan real estate or like Miami beachfront property, but not every person can just go buy like a $20 million house or, you know, way more than that as an asset. It's hard to buy something. Like if you were to think about how can I buy something and pass this on to my grandkids without it losing its purchasing power, there's not that many great assets that can do that. And so then people often quote Satoshi and say like the greatest thing that he invented was this idea that there's this digital currency that's instantly transferable from person to person. I think Saylor quotes this in his digital gold rush, but he says that the better form of it is that he's created this asset that doesn't lose value. It's this perfect store of energy and capital that preserves its purchasing power almost over infinitum, right?
Yeah.
It doesn't have these risks associated with it, these physical risks of decay. It's an asset without decay.
Yeah. And then it doesn't have financial risk. Like it's not an Apple stock where they could come up with some really stupid idea or have some other risk approach them from a financial standpoint, and it just goes down in value. Like it's a commodity. There's no issuer. It's software. It's a protocol that creates Bitcoin, TikTok, next block. Like it's not going to stop. It's decentralized. You could shut down all of the internet and all the things, and once you turn it back on, like Bitcoin's still going to be running.
Still going. Yeah. I think talking about that financial risk and specifically Apple, I think it was actually Steve Jobs that has a quote that talks about if Apple was to start buying back their own stock, that means you know that they've lost it and they've stopped innovating.
Yeah.
Right. And so that's a financial risk in itself. I mean, you look at Apple today, they're really not innovating.
They're buying back a crap load of stock.
Right. They're doing the exact thing that he said you should be worried about if they start doing.
Yeah.
And that being in the Mag 7, that's one of the companies that the vast majority of people are buying and holding on to. It's not innovating, right? Bitcoin doesn't need to do that. It is the innovation.
Yeah.
It is the digital. It doesn't have that risk associated with it.
It captures all of the economic energy of all the innovation.
Yeah. What we're getting at is that when you go work and you mine fiat and you want to preserve that wealth, our argument is that the best way of storing your wealth with the least amount of heat loss, the least amount of your energy that is lost and expended, is by storing it in Bitcoin.
Yep.
So that
gives you this scale. It expands the scale to what you see here.
Right. And it gets back to this whole meme, you know, it's like the wife laying in bed next to her husband or her boyfriend. And it's like, he's probably thinking about other girls, and it's got him on the other side of the bed with laser eyes. And he's like, I need to stack as much as I can to retire my entire bloodline. It's like a joke meme, but at the same time, we haven't ever had an asset that you can just own and be like, okay, this is what I plan to give my great grandkids and know that they're going to be well off. Right.
Yeah.
Bitcoin is like 10-fold longer lifespan than some of these other assets that we currently have.
But I think if Bitcoin becomes what we believe it will become, it's crazy to think that our great grandkids hopefully will remember who we are because we started our family down that path. Right. Like I remember a couple generations back, but beyond that, like it just gets lost to history.
So we made the podcast, Chris.
Yeah.
No, I'm just kidding.
YouTube's forever.
Yeah. You listen to your great granddaddies. Little kid, listen to Doc Stacks.
Yeah. This slide just, again, it just lists out what we've talked about, but digital capital in Bitcoin doesn't have the things that weather every other physical asset. There's no tax. There's no weather. There's no corrosion. There's no tenants you have to worry about renting your property to. It's invisible, indestructible, immortal, teleportable around the globe for insanely cheap. It's programmable. It's infinitely divisible, or divisible up to 100 million. That's Satoshi. Musical. I don't remember what Saylor meant about musical.
I think it talked about how it had like a specific frequency that like reverberates at. Can't remember the exact quote, but
I think it was that you can basically trade it like at 60 hertz, like however many thousand times a minute or something.
I think he was trying to stick in a musical.
I think that's what he meant. Yeah. Fungible and configurable. aka it is digital gold. It's better than gold. Always gonna be better than gold.
Yeah. It's like the whole stuff. Look in the news, right? You go see the Tesla cars being shot at and lit on fire, or all the Waymo cars that were lit on fire and all the California riots. Like, this is all examples of like physical capital, just how easily it's destroyed. Right? You can't touch my Bitcoin because I already lost it in a boating accident. You know, like it's this digital transformation of capital that we've never seen before.
Yeah. And like just all the weather, the floods we had in Texas, like
yeah, that's a great point
the
too.
loss of life is horrible. And our thoughts and prayers are with those people and those families. And being in Texas, like we have, you know, I think some people that are indirectly affected, if not directly affected. But anyway, but that property that got wiped out by the flood, that was like a family, like a passed down thing. Like that was someone's family's future financially, and it's gone in one storm. Obviously, that pales in comparison to the loss of life that happened. But just to highlight, like in recent events, you can have a family business that you think is going to go on forever, indestructible, even and it's based on property, which is like a very long term thing, right? But I guarantee the value of that property, where that flood and tragedies happen, like it's not going to sustain that family like they thought it would, right?
Yeah.
So this is a highlight, and all these excerpts are from the Digital Gold Rush presentation by Michael Saylor. Again, we've talked about how we can't spend hours and hours and hours, and we don't want to make you sit through hours and hours and hours of us talking about all this stuff. But Bitcoin's based on proof of work. You trade electricity and economic energy to mine Bitcoin, and then if you're not mining it, you're buying it. You're trading your economic units from someone else to buy it. All that to say, like it does require a level of commitment and dedication to want to learn about this stuff. And I think if you take it with that mindset, you're able to find the methods and the videos and like the medium that speaks to you most. Is it an audio only? Is it a video? Do you want to read it? Whatever it is, it doesn't matter as long as you have a plan and you go after it relentlessly, which is this next slide too.
It's just like med school, right? Like I think the vast majority of us probably either didn't go to class or you watch stuff online, you watch it at 2 times speed. I mean, that's the same thing you guys can do with learning about this stuff. Is there's so much access between AI and the wealth of information on the internet. Like you have exposure to all this stuff. Just like watch a couple podcasts, get yourself interested, and then ask questions. Like use X as a resource. That's what we did. That's what we started talking to individuals, and you just learn so much from everybody else.
Yeah. So we've talked about in this episode, what are we going to do? We woke up first episode, and now what are we going to do the second episode? How do I move forward if I want to pursue Bitcoin in terms of achieving my goals? So this is where we get to the nuts and bolts of like what you do. So number one, you study Bitcoin. Find a framework that works for you of how you want to take in the content and discuss it with other people. Like I talked about last time, find a Bitcoin friend, either in person or online, and like bounce ideas off each other, learn together. Identify your learning style, get a few key resources, and just put in the work. Bitcoin's proof of work, it doesn't change for you individually getting into it either. Next, which we highlighted, is getting to know your employer plan. Find the portal, reset your password, whatever you need to do. Find out where your retirement is going, what the default is. Hopefully you've moved away from it, but I know a lot of people have not, which I'll talk about on the next slide. There's a huge number of people in their 401k through work that never change from the default. And it's going to be some bond and equity weighted thing that's time dated for when they think you want to retire. And they're basically saying what they think you want to live off of when you retire. So that's not, but in terms of, in the bigger scheme of monetary debasement, like you're not going to get ahead with that. You're barely staying afloat.
Yeah, it's already going through that whole process of like at the very beginning. Remember, I was telling you, age is not retirement is not an age; it's a number, right? It's doing the exact opposite of what you should be doing, right? Here's my retire at 70 portfolio. That's super like, but with the it's not calculating all the real inflation rate. Like you're just going to shoot yourself in the foot by going through one of those. You want to take control of your financial future, and it is solely on you. Like no one cares about your portfolio like you do. A financial advisor's not. That's what we're trying to get at with this whole idea. And so I think there's 2 big components that you really have to understand with investments. The first one is like your savings rate, and that's different for everybody, right? You got to live within your means. You don't want to keep up with the Joneses. We could talk about all that kind of stuff to the nth degree, but you need to pay your future self, and that's what savings is. And the other component to that is that I think Albert Einstein famously quoted, "The eighth wonder of the world is compound interest." And I just have a small example of that. Say you invest $500 a month, and there's an average of an 8% return on that $500. You compound that over 20 years, and that $120,000 investment that you put in for 20 years is then worth $220,000, right, at that return. Over 30 years, that becomes $700,000 at a $180,000 principal cost. So you start to see like that's the power of compound interest. And you take into Bitcoin as the hurdle rate at an average CAGR of 20 to 30%. And it's just wonders. That is that preservation of your purchasing power working for you in real time to the nth degree, right?
Because if you're not beating inflation and debasement, you're not preserving your purchasing power.
Right. And that's why you're running faster on the hamster wheel. That's that feeling you have of like, why can't I keep up?
Yeah. This quantifies why people get caught up, why they think they're doing the right thing, but they're unfortunately not. I'll read it because I know the orange on black in small text is kind of hard to read. But the overwhelming theme of this slide is that a huge majority, 70%, 90%, 60%, even as you move out over time, that big number of people just stick with the default of whatever their 401k is in. So there's going to be some time-dated retirement fund that hopefully you're not paying a fee, but some places you're probably paying a fee for them to manage it a couple times a year. All that to say the default, whatever the default is, doesn't mean that it's safe and it's going to get you to your goals. Like Adam said, no one cares about your money and your goals more than you do. So part of waking up is realizing what you got yourself into, maybe by accident. We're all busy. We're doctors, mainly doctors here listening. You have a life, you have kids, you have a practice. Like it's okay that this is where you're at, but you need to find out where you're at and study and decide to make a change. And again, that we're not saying the opposite of that spectrum is just being a trader and like day trading and doing all this stuff, which sometimes it's like doctors either are too busy to care or they think they're smart enough to day trade. That's the spectrum.
It's a quick way to lose for a lot of
we're talking about being solidly in the middle.
Yeah, you're smart at other things. You're not smart at trading, right? We didn't go to trading school. I think another big thing, kind of that Chris made me think about this, is that like as you go through medicine, you go through medical school and residency and all that delayed gratification. Then all of a sudden you get that big paycheck and that big salary. And a lot of people jump into like living at that salary, right? You're making $300,000, $400,000 and you live off $300,000, $400,000. And I think an important thing to consider is that like you need to live well within your means and almost find enjoyment in saving. Right. Yeah. So I think those people, it's keeping up with the Joneses. The wealthiest people are not like the wealthiest people that you see on the outside. They're not the people that drive like the super fancy cars and live in like the nicest houses or wear the nicest clothes. They're the people that find enjoyment in like saving $1 rather than spending $1. And so like that's what we're trying to get at, is that once you start this process of like enjoying saving and like starting to take accountability of like what's in your account and your 401k and watching it grow, you start to find enjoyment and like watching that nest egg grow. And that's what we want to spark, is kind of like that enjoyment in that process, because that's what that seedling is what ultimately grows into financial freedom.
Right. So the next step would be determining your personal risk tolerance, like based on where you're at in your career, what you're expecting to pay for in the future, like your future liabilities. Do you have kids? They're going to get married. Are you going to contribute to that? They're going to go to college. Are you planning to contribute to that? Are your parents still around? Are they going to have health needs that you feel like you need to contribute to? Like everyone's situation is different. There's no one size fits all approach, but you have to have an honest sit down, put it to paper. What do I think my liabilities and like responsibilities are going to be over the long term? And I'm going to have to overcome whatever that demand is to be financially free in the future. So there's cost of living, like where do you choose to live? How do you choose to live? What specialty are you in? Is there side income sources? Like if you own a practice and own a building, is there equity that comes with that? It's all different, but you have to know where you're at to know how you're going to match that with your portfolio, which is the next step. So as we talked about, the core and the foundation of our entertainment only recommendation is that the core's got to be Bitcoin cold storage. self custody. Ideally outside of your retirement, like above and beyond whatever you're saving. But in your retirement plan, everyone's going to have to do ETFs to get that exposure, right? There's no other really way around it, but that should still be the foundation inside of your retirement, I think. Do you agree with that?
Yeah, I think the interesting thing is I think like the earlier in the Bitcoin space, most people will get orange pilled, and like the earlier you got in, you're kind of more of like a Bitcoin purist. And I kind of noticed this just in like our close friends that were in even earlier than us, right? They're like, they stack sats and then they find a hard time like buying treasury companies or ETFs, right? They're like, there's no Bitcoin like pure Bitcoin. And I think as we move along, what's going to wind up happening is the vast majority of people are probably going to start getting exposure through their retirement accounts in ETFs and through treasury companies like Strategy. And I don't think that's necessarily a bad thing. I think there is an element of like, you want to own physical Bitcoin, there's self-sovereignty there, and that's really important. And that has a lot of additional benefits. But being realist, I think the way that the vast majority of this credit-based system and all of this capital is going to get exposure to Bitcoin is through the ETFs and through treasury companies.
Yeah.
And what's going to wind up happening, and we're saying it's okay to first get exposure through that. You know, getting off zero is the most important thing, because then it's going to force you to start doing the proof of work and the research to understand all this stuff and to be knowing what you own in Bitcoin. But it's almost going to be, I feel like, this reverse orange pill where people are going to get exposure to the ETFs and Strategy and then start to learn about it. And then they're going to be like, okay, I own, you know, X number of Strategy shares or this amount of IBIT or FBTC. Here's why I need to own Bitcoin too.
Yeah. Because once you, I think people get attracted by the performance and they're like, oh, that's a hot stock, I'm going to buy. Like when talking about front running S&P, like Strategy's on track to get included in the S&P soon. You know, they qualified. They met the qualifications to have to pass a committee in the next inclusion. If they make it, that's a whole other discussion. If they make it through the committee, but for all the check boxes, they've checked them all. So they're going to be in the S&P 500. That's going to be a headline. People are going to hear about it and be like, what is this company? What do they do? And they're going to be forced to realize that they know some stuff about Bitcoin or they have a lot to learn. Right.
Yeah. It's kind of the natural tendency of human beings, whether it be a good thing or a bad thing, to kind of compare yourself to others. Right. And I mean, you can talk about this with people looking at like, oh, you own X number of stuff. Grass is always greener on the other side. Companies do the same thing. Right. So when companies start looking at like Sailor and Strategy posted 14 to 15 billion in earnings in a quarter and their market caps, like 86 to 100 billion, something like that. Yeah. They're going to start to take notice. What is he doing differently? And all of a sudden, I think very quickly, we're going to start seeing the transformation of these balance sheets on a lot of S&P companies from these zombie companies that aren't really moving to owning Bitcoin as a way to stay afloat and to try and catch up.
Yep. So their market cap is 121 billion and they own $70 billion worth of Bitcoin. Just
right. Okay. So that's probably from the price appreciation within the last week, that extra 10,000 per coin. So
we're crafting your portfolio. Everyone's a little bit different, but like, what are people recommending that you do to Bitcoin?
Go ahead.
It's loading. Hang on. Rick Edelman, who's a big advisor and kind of a name in the space of retirement wealth advising, made headlines at the end of last month, right before the 4th of July, saying that 40% of your portfolio should be allocated to Bitcoin and crypto. That was pretty big, pretty long news cycle, like even for how quickly the news turns over. Like I think I snapped this like pretty soon before we recorded this, and it's July 12th. So it stuck around. People are talking about it. It's making waves. Bitcoin's coming to portfolio near you. Hopefully you do it on your own terms. Because eventually I think all the retirement advisors are going to start doing it for you.
Yeah. If you guys have any interest in this specific individual and kind of learn about, I think Coin Stories with Natalie Brunell, which is kind of a well-known Bitcoin podcast, recently had him on, and he talks about why he believes this percent allocation. But like Chris said, this number is just kind of like all of a sudden crept up. Like I remember 6 months ago, it felt like people were talking about 1% to 2% invested, and then all of a sudden now you're seeing like 3 to 5%. I mean, he's out there being 40% is way higher than a lot of the other people are recommending. We're not saying you need to start there. What we're saying is get off zero, right? You just need to start somewhere, start to understand it. And the more you get into it, I know Chris has mentioned this before, the more you get into Bitcoin, the more you realize like, I need more.
Yeah.
Right.
And like getting off zero, like what does that look like? If you believe what we're saying, do your own homework and like agree, okay, I need to get off zero. What does that look like? BlackRock, who's a big name in the space, in the wealth space and just around the globe, like they own whatever company you think of, they own like a huge majority of it.
Yeah.
But they came,
they're the fourth branch of government.
yeah,
Right. They tell all the
basically.
other assets and
But they came out earlier this year, if not late last year, and said that 2% of allocation to Bitcoin was reasonable, which was a big deal. Like that was the big allocation recommendation that kind of made waves. And they backed it up with this research that I kind of screen grabbed from. But if you want to get off zero, but let's say you don't want to increase your risk, you're like, this is still risky, but I think I should get off zero in case it catches on, right? Which is another Bitcoin ism. 1 to 2% of Bitcoin is the same portfolio risk as holding the Mag 7, which are the top performers in the S&P 500. So if you add those in the same way that you would Mag 7, you're not taking on any increased risk. So hopefully that's reassuring to like, if you want to get off zero, but you're skeptical, 1 to 2% is a very solid recommendation. And it's backed up by the BlackRock name, which is a huge deal. Adam, you want to talk a little bit about investing versus trading? Just make sure that we like hammer this point home.
Yeah, I think there's like a famous quote that, you know, the best investors are dead investors, or like the ones that forgot about their portfolio. And this is this whole idea of like, we talk to you like, you want to be an investor and not a trader, especially when you're first starting out. Like there's depending on what kind of account you're trading in, or, you know, that's the point, is that there's going to be taxes associated with each trade you have, unless it's specifically in your retirement account. And that's this idea that you want to have like a concentrated hold. And the really important part is like dollar cost investing, which is like learning how to just put money in at a set period of time and not try and time the market, is going to generate much higher yields than you trying to like trade when the highs are, when the lows are, right? The vast majority of us are not going to be able to do this. And that traders tend to underperform on much longer time frames compared to just investors that stick to a plan and do not trade based on their emotions, right? We all have FOMO. Like when you see Bitcoin pop the other day and went from 112 to 117, like we have, you know, colleagues that come up to us and like, well, why is Bitcoin coming up?
Why didn't you retire yet?
Yeah. And asking us, should we be buying now? It's like, no, you probably should have been buying 6 to 12 months ago when we were telling you to buy at, you know, 60 to 70,000. And I don't think it's too late now, but we are in the middle of a bull market. I don't want to be telling you, you know, it's that idea of trying to time the market. I think it's more important that you just like, okay, I'm going to buy every paycheck every 2 weeks and buy X amount, you know, and it doesn't have to be some extraordinary amount. It's that getting that started and tucking in a small amount away. And then you start to see the appreciation that occurs with Bitcoin. You're like, oh, wow, this amount tripled in 4 years, you know, even if it's a small amount, you start to realize what those compounding gains are.
Right. If you try to trade, the data shows that you do really poorly. This chart's hard to see. This table's hard to see. But if you chart it, like this is comparing the S&P, which is the yellow line, and then if you're a trader, buy a mutual fund investment, like you underperform every year. Like making emotional decisions and trading in and out of things does worse than
you're gonna have a bad time.
Yeah, it does worse than the S&P, which is already losing to inflation. So just please learn how to sit in your hands and do something with conviction. I think a lot of people do this because they think they're chasing, like they're being diligent and like chasing the right thing. But number one, doctors are not finance people, and we have another full-time job that's very important. And you're not going to be better than someone that has a full-time job and supercomputers pointed at these things.
Yeah,
you're just not.
It is asymmetric for you to lose, meaning that the other end of the trade, the guys are much smarter than you. They have more information than you. They've been doing this longer than you. Like you will lose trying to trade. It's more important that you just buy, hold, and dollar cost average in. And so the whole point is like, there's a lesson in there, right? I like to joke, you don't need to be dead to be a good investor, even though the dead investors tend to outperform. It's this whole idea. And I remember one of my buddies that originally orange pilled me said that like 90% of Bitcoin's gains occur in just 10 days of the 10 best trading days of the year. And so you think about that, there's 365 days a year. 10 of those days is less than 0.3% of the year. You really think you're going to be able to guess when those 10 days are and like, you know, buy in before and then sell high at those? Like, no, the answer is no. It's not going to happen. Like, you're going to miss out on all of that if you try and time the market. It's time in the market, not timing the market, especially when it comes to one of the most volatile assets like Bitcoin.
Yeah. Yeah, if you miss those 9 days, you trade flat to a loss. Like you're worse off than when you started.
Right.
So that's kind of the summary of what we think, and hopefully you walk through that process with us and like get off zero in a reasonable allocation that's paired with your risk and like your goals in the future. For us, that looks like actually a single company for a majority of what we store our value in outside of just spot Bitcoin, which is Strategy, MicroStrategy. Michael Saylor is the former CEO. Now he's the chairman of the board of that company. We've shown a lot of his content and a lot of his quotes and presentations, just because he's such a thought leader and innovator in this space and has done amazing things with the company. Adam, you want to talk kind of like the backstory of like why he got to that point?
Yeah, obviously, like I recommend anybody just go watch any type of Sailor YouTube or podcast and just watch him talk. And he's just so knowledgeable and does an amazing job relating all these things together between, you know, his background in physics and his in history and economics. It's just amazing to watch, and he does a really good job putting it together. But basically, Sailor is one of the last surviving tech guys from the 1990s. MicroStrategy was a company started back in 1990, and it's been around for the last 30 years and was successful. And around 2020, around the time of COVID, Saylor was sitting on about $500 million in cash on the company balance sheet. And he realized when they shut down all the markets and, you know, the inability to work and all that, as well as cut interest rates to zero, that he was sitting on, and they were turning on the money printer, he was sitting on melting ice cubes, right? And he's like, all this work I put into the company, how am I going to generate profit for my employees? How am I going to make sure that all this capital that I've accumulated doesn't just melt? Right? Because like we talked about, the dollar depreciating. And so he went through and started looking at all these assets. And it gets back to that thermodynamic theory we're talking about, which is relating these scientific and physical properties to like economics, which we really haven't ever historically done. What is going to cause all of that energy he stored in that 500 million to best preserve its wealth over time? And so he looked at, it's like, obviously can't be dollars. What about like gold? Well, it's like even gold, you know, that's going to have costs associated with storing it. And then there's going to be 2% inflation rate on gold. So over 40, 50 years, that the value of that's going to be cut in half as well. What about like collectibles or like fine art? He's like, well, how am I going to pick out which Picasso piece to buy and hold like on the company? How do I even do that on the company balance sheet? So he ultimately got into Bitcoin, and he converted 500, you know, he did the work, that a ton of work to understand it. He converted that $500 million in capital to Bitcoin. He was the first public company to ever do that. And in those 4 years, from 2020 to, I guess, 5 years now, the company balance sheet has gone from 500 million to, what is it, 80 billion in assets?
70 billion.
70 billion.
With the latest pump, yeah. So almost 597,325 Bitcoin for a value of 70,269 million.
So just a casual 140x in the last 5 years. And that's what we call conviction. Right. And he continues to do that. And if you look at what he's doing, he puts a buy up every Sunday, you know, a green dot that he's buying more Bitcoin. And you see that he's doing the exact same principles we're talking about. He's not trying to time the market. He jokingly says he's going to be buying the top forever. Yeah. And that's because it's going up forever, Laura. This is the asset that doesn't decay. Like he's going to be buying forever because it's going up forever.
Yep. And he's committed to, you buy it and you get a set Bitcoin per share. And he's committed to always increasing that Bitcoin per share. So it's essentially like a Bitcoin dividend that is just automatically applied to your share, right? And then the market values how much premium it assigns to that based on all different kind of things that we could talk for hours and hours about. But it is the most efficient way to intelligently leverage like a corporate balance sheet and give it back to shareholders.
Yeah, and Chris and I got into this because we had actually rolled over this, you know, this is like early 2023, 2024, that we had rolled over our resident retirement, and we had both kind of separately not being able to get exposure and residency to Bitcoin in our retirement, but our company was actually through Vanguard. And funny enough, Vanguard still does not let you put any of your assets into Bitcoin ETFs, but it lets you put it into strategy. So Chris and I both separately wanted exposure in our retirements and started investing into MicroStrategy at the time. And we started talking about it, and that's kind of how our thesis formed. And so we saw MicroStrategy go from a company with 200,000 Bitcoin to now 600,000 in the last 2 to 3 years. And I think that number is only going up, and we see a number of companies that are starting to copy that playbook, and it's performing tremendously well for them.
So what is Saylor actually doing? If for people not familiar, he's taking Bitcoin, basically raw Bitcoin, which is a volatile asset that a lot of people shy away from because it's too volatile, too risky. They don't understand it. And he's transforming it like a refinery. Like this is, I'm going to go to this next slide. It's an oil refinery example, taking something from the ground, like a raw input, and making all these different outputs. He takes Bitcoin as the raw input and then creates all these different securities that are different risk profiles and return profiles of Bitcoin to essentially tap all these pools of capital that have mandates or preferences or just reasons why they can't just go buy spot Bitcoin. And he's been very successful at doing that. Like this slide, when I clipped this from, I don't remember which earnings presentation, but they had 279,000 Bitcoin. Now they have almost 600,000. This is not that old of a slide deck.
I think it's working.
I think it's working.
Yeah. So I think the big thing I take away from this slide too is that, like Saylor said, Strategy is a company that is using a Bitcoin nuclear reactor as the core. Mm-hmm. And people like to say and kind of, make a bear case of like, well, Strategy shouldn't be trading at more multiples than it's actually at the Bitcoin on its balance sheet are worth, right? This whole principle of MNAV, they say MNAV should be 1 because it should only be trading on the assets. It's not actually doing anything. It's just holding Bitcoin. Well, we're arguing that Saylor is refining that Bitcoin into a number of different products that get exposure to different capital markets that Bitcoin can't otherwise get exposure to, right? Yeah. And so it's this whole idea that like he's making Bitcoin available to the credit-based markets in a number of ways that Bitcoin can't get exposure itself. And the capital in that markets is worth hundreds of trillions of dollars compared to just like on a corporate balance sheet. And right. So he's created this almost like black hole funneling fiat dollars that are being wasted away in different credit markets. Like we'll get to the fixed income market specifically with some of the preferreds, and funneling that into Bitcoin. And it's this giant perpetual flywheel and this whole principle of Bitcoin torque that's driving the company forward.
Yeah. And he's holding it forever. He's not going to sell it. I think that he has a huge amount of optionality in the future just based on the size of his Bitcoin stack. But right now, as he said, it's the Bitcoin gold rush, and he's in full accumulation mode, and he's been very, very successful.
Yeah. And I had to look this up too, because the notion of the Bitcoin, digital gold rush. I think currently 94% of all the Bitcoin that exists, all 21 million, 94% have currently been mined. In the next 15 years, at the end of those 15 years in 2040, 99.8% of all the Bitcoin will have been mined. Yep. So that means in these next 15 years, there's 5% of Bitcoin left to be mined. And then in the next 100 years after that, there's 0.2%. So that's this whole notion of like compound interest is the eighth wonder of the world. You can apply that there too, right? Like, it's going to be so hard to stack sats in the next 10, 15 years. That's why all these treasury companies are starting to try and generate these flywheels to accumulate as fast as possible.
By any means possible. Like if everyone has a little different flavor, different spin, and I don't really fault them because they're using whatever tools they have necessary.
Yeah, they know where this is going.
Yeah. To round out the refinery example, like Saylor presents this slide with his Bitcoin refinery slide, but basically a standard oil takes oil out of the ground, and a plane company doesn't want to buy crude oil. They pay a premium for them to refine it into jet fuel. And the buyer of jet fuel doesn't want the low end of the spectrum, which is like asphalt. So every buyer and every capital pool is the what he means by buyer. Like they have different preferences and different needs.
Yeah, there's a different market for each of those products, right? And there's a ton of capital in each of those different markets, right? You can sell to the jet fuel to the planes. You can sell the gasoline to the individuals. You can sell the heating oil to the different companies that need that. You can sell the asphalt to the construction companies.
And that's the same back on the strategy slide, but you can sell options to people that want more risk. You can sell fixed income and buy preferreds, like to people that want a stable return with possibly some upside.
They want less volatility, right? They want something that's going to be not going to deviate, but it's going to yield a high fixed income.
Right. And there's the whole spectrum that he creates in between that. So the fixed income that we just mentioned, he has a whole suite of now three preferreds: Strife, Strike, or 3. This is actually, we didn't put the most
This is
updated
behind.
slide. This is
This
behind.
is a month and a
That's
half
my
old,
fault.
so it's
I'm
way
the,
out, way out because it doesn't
I'm the
include
tech guy.
Stride.
I'll dock my own pay. But Stride is another one. So there's 3 preferred equities that he has listed that are senior in the capital structure, above the common stock, and they offer a fixed dollar dividend in perpetuity. Like, they never come due. You can invest in these products, and if you believe in the thesis of Bitcoin and Bitcoin has technology in preserving that value, he's going to preserve that value for you and pay you a 10% coupon, $10 per share annually, or 8 depending on if it's strike, but 8 or $10 a year per share forever, which is
Yeah,
just unheard of.
we'll talk about the preferreds on a different time because there's so much you can talk about, and this is like such a novel and huge concept that is of utmost importance to understand, especially if you're going to invest in strategy. And I think a ton of the other treasury companies are going to move in this direction with preferreds as well. But it's this whole notion of that Saylor is going after the fixed income market, which is over $500 trillion in value. Remember, Bitcoin's a $2 trillion asset at present time. And he's funneling in all these dollars that are in all these kind of junk bonds and kind of useless capital and funneling it into the digital transformation of capital into Bitcoin, right? And so that's why he created these preferreds. If you think about what strategy is, like Chris said, they own 80 billion in assets on the balance sheet, and their debt is somewhere along 6 to 8 billion. They're 6 to 8 times over collateralized. And so if you think about like what Strife is, the highest in the capital stack, I think the most recent equation I saw is that it's almost 66 to 1 over collateralized as an asset, and based on its liquidation preference. What does that mean? That means that Bitcoin, currently trading at an average of 120,000, has to go down to like less than $3,000 or $4,000 a coin for you to lose that capital.
For them not to repay that principal.
Yeah. And then you go look in the fixed income market, and all these people and big bond traders that are going after dividends, and they're looking at all these super risky assets like Boeing and PG&E. I know the True North guys talk about this all the time, but like Boeing's got planes falling out of the sky, and PG&E is the company that insures all the wildfires. Like, those are some of the riskiest assets you can own. And
PG&E causes the wildfires. They're the energy company in California, and they have been tagged for like multiple huge wildfires recently. So like, they're on the hook for all this.
And you're taking on this huge risk owning that to chase a 6% dividend. And meanwhile, Saylor's got the most over collateralized products on the market, and he's offering 8 to 10% yield on those products. Yeah. Not to mention that the principal of those, like, they're starting to get repriced. If you look at some of these assets like Strife and Strike, they've started at $85, $90 principal costs like 3 or 4 months ago, and now they're trading at $125, $130. And that's because they're starting to get repriced. People are starting to realize the value and how low risk these are compared to some of the other assets in the market. So that's the big novel idea of how strategy is funneling all this capital into Bitcoin.
Yeah, and this slide actually, it can be hard to read, but it's from Jesse Myers, huge thought leader in the space. I think he's working for UTXO Management and now advising Smarter Web company. But Bitcoin strategy is basically buying Bitcoin by siphoning all of the money out of the bond market, which is this gray box, right? And they created a pump to just keep pumping economic energy and value into Bitcoin. That's the capital pool they're going after. Saylor's been on record saying he wants 1% of the bond market, which would be $3 trillion of Bitcoin.
Yeah, that's 1.5 times what Bitcoin is as an asset class right now.
Yeah, it's crazy to think about. All right, it is 12:15 in the morning at the time we're recording this. Adam's been working for way too long. It's time we wrap this up. So we talked about today having a strategy. You need to know, take a breath. You got a new job. Maybe you've been in the job for a long time and you forgot about where your money's invested. Go find it. Go figure out what it's doing.
What do you own?
What do you own? What is it doing for you? See what the returns have been. If you're happy with it, don't turn into this pod again. We wish you the best. I have a sneaking suspicion that you're not going to be super excited with the returns that from an investment you forgot about, right? Because if you look at what inflation's really doing, like it's been melting, right? You're barely keeping up. So we would advocate that Bitcoin is the hurdle rate, and if you can't beat Bitcoin with your investments, then you got to buy Bitcoin. I think Anthony Pompliano is famous for saying that. You got to match any of these decisions with your risk tolerance and like your future lifestyle goals and your personal goals. And it all comes down to just continuing your education and always be reassessing your portfolio. What we've both ended up doing is basically putting all of our eggs in one basket, not one basket, but a very narrow basket. And as a result of that, it's very prudent of us to constantly watch that basket, which is us being on X all the time, seeing what's new in the space while we're making this podcast, because we're just like overflowing. Like we can't just talk to our wives anymore about Bitcoin and what we're learning. Like
without getting the sailor sigh.
Yeah, we gotta take it somewhere else. So we're taking it to you guys.
I think another big thing that Chris got me to think about when he was saying that, like putting all our eggs in one basket, we're not telling everybody to do that, right? So we're kind of known, we're two of the younger anesthesiologists in our group, and we're kind of known as the Bitcoin guys in our group because we talk about it all the time, just like at work, at home. I get the common question of like, you have a lot of your wealth in Bitcoin. How much should I have? And these are some of the older folks in the group. And I always tell them, well, it's all about your risk tolerance, right? I can afford to put in a high concentration into Bitcoin because say it does blow up, I have time to rebuild, right? I understand that a lot of other people don't, and they're closer to retirement. So I'm not telling you to go put in 100% into Bitcoin at age 60. I'm telling you there are other products that are less risky that Saylor has created that if I was that age, I would be investing in, some of those being like Strife and Strike, because they have a much lower downside, but they still have a great amount of Bitcoin upside. So there's a product for everyone in the Bitcoin space. And it's important to go out and get exposure to that because we're still very early. And I think you can still build tremendous wealth in doing that.
Yeah. My dad's been orange pilling colleagues and like family with like the preferreds. Like they're people that are getting like right have just retired, about to retire, and like it's like, well, have you thought about this product? Like it's way over collateralized. Like they have the money. They're just going to pay you like a set coupon for forever.
Yeah.
If you just do a little bit of work, I think you'll see that it's a pretty good deal, and it's going to beat whatever returns you were hoping to get.
Yeah, I recently went out and met up with my granddad who lives in Oklahoma and just kind of spent the weekend with him. It was really nice to just kind of talk to him. And he just turned 80, and I've been trying to talk him into Bitcoin a long time. And he's a smart guy, and he's been retired for a while, and he's got a stack of capital, and he just couldn't get in because of the volatility. And so I finally convinced him to buy Strife. And this round was like 105 a share. And I was talking about how it's not going to go up like Bitcoin, and it's not going to go up way as much. And it's much less risky and less volatile, but it's got that fixed yield. And it's very safe because it's highest in the capital stack. And, all this stuff that we recommend everybody look into. And sure enough, Strife, of course, goes up by $20 a share in the next like 2 weeks. And I get this text from him, and he's like, how come it's up so much?
Yeah.
It's like, I thought it was just a yield product. And that's what I'm trying to tell them is like the space is so new and stuff is getting repriced higher because people don't understand.
Yeah,
like,
the market doesn't understand what
exactly
what the plan is yet, and like how to appropriately price these for the risk that they do or don't offer.
It is an asymmetric trade still for sure.
Yeah.
And so that's why we're trying to get this message out, especially to the docs that need it. Right. And even further along, like that's owning ETFs. That's perfectly fine too. We just think you should get exposure.
Well, I had a thought and I lost it.
You talk about the AI.
I need AI to summarize, to wrap this up for me. But maybe if the thought comes back, I'll bring it back. But the action items in medicine, we do handoffs. You're signing off your patient list to the next person. Poor schmuck that's working nights. I guess we're handing off to the day shift because we're working the night shift right now.
That's right.
So for the day shift, before we meet again, here's what I need you to do: find your retirement benefit portal, reset the password. I know you forgot it. Your Google Chrome didn't save it, so you're gonna have to reset it. Just do it, and then review what's in there. What if you got put in the default? That's fine. I would strongly advise you find out what the default is and probably move away from it. But just learn, like take an assessment of where you're at, and decide what choice you want to make and what percent you want to allocate towards Bitcoin. We talked about the risk of different allocations, some recommendations that are out there. Different options, different flavors, whatever fits your personal needs and goals. There's something out there. And if there's a way we can help, obviously reach out. And then my personal recommendation is just we talk about drinking from a fire hose. This is like drinking from the water tower. Like it's just like so much volume and pressure, and like you can easily just get overwhelmed. So I personally use AI daily, multiple times a day. It's replaced Google search for me. And I do like tons of little mini thought projects throughout the day, throughout the week. Like I think about a topic, how does it relate to this other topic? And you just start chatting with an AI LLM like ChatGPT or Grok on X, and you just find ways to integrate that data analysis and information into your daily life. And then it can do cool things like it can make grocery lists, it can modify recipes for you, it can summarize YouTube videos, which I think is really cool. Like it helps you be more productive with your time. And that's where AI is taking this whole thing. Like that's a big part of the growing out of this deficit thing. So my final closing thought, I guess, for the episode is don't be afraid of AI. Like it's not going anywhere. So it's time you start like just try it out, see what it can do for you, because I think it has a use case for a lot of people for a lot of different things.
Yeah. I think just playing with it is important, right? And Chris kind of mentioned this on the last podcast, and kind of held up his phone, and I really liked how he talked about it. And he was like, you don't realize what you have at your fingertips, right? And I remember back in like 5th grade when all the teachers were like, you're not going to have a calculator in your pocket. It's like, now I have
I don't even need a
AI that's
anymore.
like smarter than any of my teachers, like way smarter, and they can teach me how to do anything. And it's just like you get this, talking medicine and talking about Bitcoin fellowship, this lifelong learning. You have this constant teacher in your pocket that you can learn anything, right?
Yeah.
Take a picture of this. How do I set up this? How do I fix this plumbing problem in my house? I think that was Jordy Visor's.
He fixes his disposal.
Yeah, it's just amazing what you can do. Right. And you just got to play around with it and just start asking it questions, and you realize like what you have at your fingertips. And mastering AI is going to make you infinitely smarter and so much better and just learn so much. And I think the other big thing I take away from that is like with the direction that everything is moving with AI, there's going to be a tremendous amount of wealth that is generated in that space. And I like to say like, the final frontier of all of that is going to be digital capital. Like where all that wealth is going to be stored is going to be Bitcoin, right? What is AI going to want to transact in? It's not going to shill gold bars right across the world. It's going to want this instantly transferable, instantly verifiable network that's backed by, Bitcoin, the hardest asset without decay.
And even if all the AI agents start dealing with stable coins, which I think is like what Jordy Visser personally thinks, is that a lot of stable coins are going to be your day-to-day transactions, but to store that value, like that's still essentially just a fancy dollar, and the dollar is not great at storing value. They're going to
the rails, right? That's the rails of the network, and then the backbone, the thing underlying and supporting everything, will be Bitcoin. And so
where it's the black hole. Like once you put it into Bitcoin, it's not going to come out, right? That's your ultimate store of value and capital for forever, essentially, for longer than your lifetime.
It's going up forever, Laura.
It's going up forever. And I think to summarize and add on to what you said, I think we keep talking about Jordy Visser, but I think he's a great thought leader and has put out some great content lately. And has he's not just a pure Bitcoin maxi either. So it's like, if you don't believe us, like go listen to him and see what he thinks. But his key point, the last few presentations he's done, is that the best pure play on AI, like as a counter of what we talked about, is like, well, I just want to invest in AI stocks. Like AI is the next big thing. Like Bitcoin's cool, but I want to invest in NVIDIA because they're going to make all the chips that run AI. Like that's great. And the NVIDIA's been doing great. But the purest play on AI is Bitcoin. And you lose all those company risks, all the financial risks, like remember when DeepSeek came out and like NVIDIA tanked? I mean, it was recovered since then, but you're one headline away from whatever you think is your ticket, your golden ticket, being worthless again.
Yeah, I think NVIDIA is a great play, right? And if you're investing in NVIDIA, you're obviously doing things right.
Yeah.
We're just trying to say there's other things, and we think that, the final frontier and the ultimate.
It goes back to risk adjusted. Like if the best risk adjusted play on AI is Bitcoin.
Yeah. I mean, if you go look, people think NVIDIA is the highest performing stock or equity in the stock market in the last, 2-3 years. It's strategy.
It's actually
people don't realize that strategy is way outperformed. Bitcoin and strategy have both outperformed NVIDIA. Right. So, I mean, just go look. Sailor posts that all the time.
Yeah. All right. Next round of final thoughts. Anything else you want to share?
No, I'm just excited. I think, it's neat to do this. Chris and I always have fun talking about it, and we get any chance we can to talk about Bitcoin. I'm really excited to start getting some other docs on the podcast, and that's something we're working towards. And I think that will be a much more engaging way of doing it. We went through enough school. What is it? When the patients asked me how much school or which school I went to, I always like to joke like, well, which one? There's like 3 or 4 schools I had to go to through undergrad, residency, and medical school.
Or my favorite is how long have you been doing this? Or you've done this before, right?
Yeah, and we both get jokes about how young we are when we walk up and you're an anesthesiologist, and I like to joke that I've read the book more recently than some of the other guys. But this whole notion of like it's not as much fun reading off a slide set or learning from a slide set. We try to make this somewhat engaging for you guys, but like if you guys are already into Bitcoin or like have orange pill somebody's, you know how fun that moment is when like you see that the gears click and you're orange pilling somebody else, and then they get it and they want to go orange pill somebody else. And it's just like this contagion that happens. Yeah. We want that. This is part of the reason we did this podcast, is we really like the idea of having some docs that have had that experience already, and then talking to docs that like don't have Bitcoin, right? And hearing their thought process. So it's kind of neat to see that stuff happen in real time.
Yeah, I think as we're summarizing this, like we've talked about the foundational stuff in these first 2 episodes, and now it's time to just go. Let's go explore. Let's see what people are doing. What do they think? How do they invest? How do they view opportunity cost?
Yeah, doc stacks. I think you can just do things.
You can just do things.
You can just do.
We're gonna sign up with that. I'm gonna name we're the hardest working docs in Bitcoin. Can we be that?
Well, can you
self-proclaim that?
Yeah. Well, you did get quoted as the most financially astute anesthesiologist.
Someone did call me that today
on X. I think Sahil said that to you, and I have to fight you for that. But
okay.
But yes, we're the hardest working. Doesn't mean we're the smartest.
We're not the hardest working docs, and we're not the hardest working people in Bitcoin. But maybe we can be the hardest working docs in Bitcoin.
Yeah, you got to add that qualifier.
Yeah.
We're excited to have those other hardworking docs on the podcast because we like the idea of Bitcoin and your assets being the hardworking thing for you, so that you can practice medicine as a hobby, as a side gig, and enjoy the rest of your life.
And for my great grandkids watching this on whatever they show YouTube on in the future, we filmed this podcast over 2 entire days. The calendar changed.
Yeah, that's right. It's counting down.
Just remember that. So I walked uphill in the snow both ways. I filmed podcasts over 2 days.
You made me think about like I told you I like to run a lot. My mom ran track in high school, and I remember one of the things she used to joke of is like, well, now it's easier for you guys. Like you guys have Gatorade. I didn't have Gatorade back in my, and it's like, I don't know that made me run.
Yeah,
fast.
That red 40 is really powering my run.
It's like that meme. It's like my what is it? My granddad full of lead. The other one full of like asbestos. My father full of asbestos, and me full of microplastics. Yeah, full of red 40.
All right, we're gonna wrap it up. Thank you guys for joining Bitcoin Fellowship episode 2 in the books. We've had a great time talking with you guys. We'll see you next time.